All right, so we're bringing you on kind of for a strategy session. A lot of times we have FAs on, and they kind of say that they always tell their clients to invest for the long term. But I do have to ask you, we have geopolitical tensions, we have a port strike, we see rising prices in commodities and oil. Are there some short-term moves that people should be making?
Sad to say, I'm probably going to say the same thing that the rest of the FAs say, and that is we invest for the long term. There's a lot of tensions, a lot of crosswinds, as you say, out there with a couple of wars, election coming up, the dock workers strike, a hurricane has really hammered us around here. But I have been doing this now for 41 years, and we always recover from these things and move forward. However, in my long time doing this, October can be a scary month. So hang in there. Look around. If you do have some dry powder, you might want to look for some bargains. They might arrive in this month. But on the other hand, we are looking at what seems to be a global easing cycle, and earnings are good. The consumer seems to be pretty good. So a lot of cross currents as usual. So hang in there.
All right. So right now you're saying you look for some bargains if they're available. I think you're talking about the equity market. I want to talk to you about bonds very quickly. For most of your clients, do you suggest a 60-40, equity bond portfolio? And are you seeing opportunities for bonds right now with all this volatility in the market? Are you suggesting a lot of your clients buy bonds to kind of lock in that yield?
Yeah, that's a great question. So we take every client individually and try to meet their goals and their plans. And if they need to have a bond allocation, it's fine. I'm not sure that 3 or 4% is going to get people a lot of their long-term goals, but if they need some, we'll buy some high-quality bonds. But overall, we are probably 80% invested as a firm in great long-term equities.
All right. So you mentioned you've been in the business for over 40 years. That means you've seen a lot of October seasonality, including like that big Black Monday crash back in 1987. You were around for that. I know you're saying you just got to hold on, but is there something that you've learned from a lot of these big, huge market events that have, led to sell-offs and things like that? I mean, I'm not saying that's going to happen. I'm certainly not hoping that's going to happen, but we do have a lot of potential volatility coming up. Is there anything that you've learned over the last 40 years that maybe not a knee-jerk reaction, but something for a long-term investor?
Yeah, you learn a lot. I do. I was relatively young in the business when 87 happened, and it was scary. My memory is we lost about 30% in a week. But so I think of maybe 4 really, really bad breaks in my career, breaks in the market. I mean, that 87 one, the 2001, which was around the internet bubble, the big recession of 2007, and then the
Right.
COVID.
You've seen it. You've seen it. So come on, you had to learn something. I know you don't believe in seasonality, but there's something that you learned from all that that can kind of carry us as we go forward with all this potential for volatility. Nobody's hoping for it.
Yeah, what you learn is, I will say, in 2000, in 99, 2000. We did have, I think, some pretty good evidence that things were expensive. PE ratios were probably around 40 on the S&P, and interest rates were on the rise. The other 3 bad ones, you didn't know it was coming. You didn't really know it was going to end. So what you learn is just don't panic. Please don't sell because most people do not get back into the market. So look for bargains. Okay. Pay attention, and things will get better.